Good evening, guys. Thanks for coming today, first of all. Right, last day of the year. Yep. So for counting, let's start with last time. We have finished up to the first characteristic, first qualitative characteristic of relevance. So we have to do the second one, guys. What is the second one? Please take down. Faithful. Representation. Okay, so take down on that. Financial information should be a faithful representation of the real world economic event that it claims to represent, where such information should be complete.
Okay, so claims to represent.
Where such information should be complete, free from material errors, and neutral. In order and neutral, yep. Within brackets, right? Without bias. Right. I'm going to introduce you those terms, which means if I give you complete and free from material errors and neutral, right? So then first one is space and right, complete, right, complete, and dash and right in front of that refers to information, refers to information, yep, that it represents. The whole picture. Represent the whole picture. Right? Whole picture. Within brackets, right, meaning a description and a dollar value. Right? Next one. Free from material errors. Free from material errors. Right? Dash and right refers to information that is accurate and can be verified. Can be verified. By source documents for their accuracy. Full stop. Immaterial errors do not affect decision making. Full stop. Take down one and space third one, which is neutral. Neutral. Also, you can say without bias. Dash and right refers to the information that is not subjective or based on estimates. Subjective or not based on, subjective or based on estimates. That is not subjective or based on estimates. Right? Where information can be verified. For accuracy. First step. Then one has space, and then that's it. Space for the faithful representation, right? Now you can see when you compare it to relevance, this is a bit shorter, yeah, and the rest also will be even shorter. So then take down the third one. Third characteristic, what is it? Verifiability. Verifiability. Right? But verifiability states that financial information should allow different knowledgeable and independent users to agree that an event is faithfully represented. Full stop. Next line, right? Verifiability is maintained by retaining source documents. Full stop. Again, the next line or next paragraph. Verifiability is thus a co method of ensuring that faithful representation is upheld. Faithful representation is upheld. Full stop. Okay guys, you can read them, I'll explain. Right? So read it. Right. So what does this is the second characteristic. What does it say? So basically, faithful representation, right, says that mainly four things. Okay, if we break it down, it talks about four things. First one is, it says faithful representation says the real world economic events should be reported in the reports. So what does that mean? So real world economic event, which means what happens in the reality should be presented in the reports, right, in such a way that such financial information should be complete, right? What is complete? Very simple thing. Complete means the information that we report should have a minimum description and a dollar value. That's it. That's the completeness. What does that mean? Let's say we are going to report vehicles, right? Then we have to say vehicles, right? Or motor vehicles, or delivery van, whatever it is, right? And whatever the value. Okay, let's say 50,000. Delivery van 50,000, or motor vehicles 50,000. So that's the completeness. So then financial information should be complete. So first one is we have to report the real world economic event in our business report. Second one, they should be complete. Third one, free from material errors. What does that mean? Does that mean so we can have immaterial errors? Yes, that's fine. Immaterial errors we can have. Okay, what do you mean by immaterial errors? So small amounts, right? Maybe a couple of dollars or few dollars, that's fine. Or maybe cents, that's okay. Right? So you are rounding this, and usually in accounting we don't report cents, right? Why is that? Because accountants are riches. No, maybe rich, but that's not the point. Then what is the point? Because they are immaterial. So let's say we are saying our motor vehicle's value is 50,520 cents. And we don't need the 20 cents. Right? Otherwise, let's say if it was $50,000.50, then you can round it up, 50,000 and more. That's it. Okay. Why? Because they are immaterial. Right. Then, which means what we have, which means we have to report accurate, right, information. That's the third one. Fourth one, neutral. Neutral means not bias, without bias. It's like the neutral in the vehicle gear. Can be, right? It's not biased. No. Actually, not subjective. Right? What does that mean? Subjective means we have an opinion, right? If it is an opinion or if it is an estimate, what is that? What is that? It is biased. Okay, so let's say if I ask you, okay, how much your mobile phone is, right? Then except the owner, we can say I think it is 1,000, and another one will say no, it is 1,500. So they are not important. Why? Because they are estimates. Estimates are actually biased or subjective. Subject to the person. Yes, it is subjected to or subjective to a person. Right? So then those things we don't actually report in the accounting information, because why? They are not important, they are biased. If we include them, then our financial information is not neutral, they are biased. Okay, so then the people who make decisions on them will be misled. Yeah. Okay. Any questions, guys, with the faithful representation? Next one, third one. Third characteristic is verifiability. What is verifiability? Verifiability, there is a big definition, but don't worry. Now that one also, now see, starting for relevance, right? You have to understand like simply. You don't have to like write the entire definition or anything. I have always broken down into pieces, so then when you guys read it, what will happen? It will be easier for you to remember. That's why I always, ask you to leave blank space, right? Now see. So when I say, see, he has written bullet points. Okay, so you also have written that. So then, see, it is very clear. When you read it, it's clear. Otherwise, if I gave you like a big bunch of, information, no paragraph, nothing, right? Then it's very hard to read that. So also, it will be better if you left lines. It will be even clear, really clear. Okay, so then, then it will be easier for you to understand as well. Verifiability. What does it say? Verifiability. Now, what does the definition say? It says financial information should allow different knowledgeable and independent users to agree that an event is faithfully represented. Actually, what it says is simply, regardless of our knowledge or independence, or like let's say, regardless of our knowledge about accounting or economic activities, and then how independent we are, right? Those people should be able to come into an agreement. So they should be able to agree that, look, this information has been, right, reported faithfully, right? There is no any like, let's say, there are no any confusion, so there are no any misleading, right? So whatever it happened in the business in a given period has been reported nicely in the reports. That's it. So if like, you know, people who have different knowledge, right, maybe they have high knowledge in accounting, or they have moderate level, or they have low level in accounting knowledge, or maybe they are independent, not dependent, right, not biased, they are unbiased, like independent people, independent users will come into an agreement. Look, this information is fine, this is reflecting exactly the picture of the business. That's it. That's what it says, right? That's the verifiability. So how do we maintain, how do we uphold, or how do we comply with the verifiability? We have to refer to the source documents. What are the source documents, guys? We did. I mean, we haven't done them in details, we are doing them, right? You know, few of the source documents, yeah? We have done them. What are those? Receipts, right? And then EFT, EFTPOS, EFT receipts, etc. Okay. So then we have done them. So we have referred to the source documents. Then our information is, we can actually agree that our information is faithfully represented. So any business that hasn't referred to the source documents, then not faithful. We can't trust them. Why? Because they are full of estimates, right? Opinions. Yeah, they are biased, right? So main verifiability, remember, verifiability is the core to maintain the faithful representation, which is the previous characteristic. See, verifiability is supporting the faithful representation. Yeah. Okay. Any question, guys? Please take down. Next one, number 4, comparability. Okay. At the financial information should be able to be compared with similar information about other entities and with similar information about the same entity for another period or another date. First up, comparisons, make it comparisons as above, require the use of consistent accounting methods in between distances or periods, in between businesses or periods, or periods, comma, so that differences in results can be linked to differences in performance. First step. If the accounting procedures are different, they should be stated clearly. Stated clearly. Within brackets, right? Disclosed. Disclosed. Close brackets. In the reports. Full stop. Next paragraph or next line, right? Comparability is linked. Comparability is linked to period assumption. You can read that one also, guys. Okay, guys. Right. Does that make sense? Comparability. What does it say? Comparability says that the financial information reported in between different businesses, or if it is in the same business, in between different periods, the information should be able to be compared against each other. So if you want to do that, if you want to compare, right, the information in between businesses or in between different periods in the same business, what should we do? We have to have consistent accounting procedures, consistent accounting methods, rules, right? Otherwise, they say if they are not consistent, they have changed the accounting methods or rules, then can we compare? No, we can't compare. Shall I give you an example? For example, let's say you guys are doing tests, yes? Let's say there are two schools, A and B. So then first school, they are doing the test, right? Whichever subject, let's say accounting, commerce, whichever. So they are doing the test, closed book. They are doing the test, no books, right? Books are closed. The other school is doing open book. Now, can we compare the results? Because there are two different rules. How can we compare? And next school and the second school can say, look, our marks are high, our average is high. But we can't compare, right? Because there are two different rules, yeah? Same thing. So in accounting also, if we do different rules, we can't compare. So profit, let's say this period in the same business, right? This period we are doing different rules, next period we are having another set of rules. Then we can't compare the profits, right? That's the story. Also, as I said, comparability is, remember in the period we said, period assumption is relating to the two characteristics. What are those? Relevance and comparability. Then I am saying in comparability, this period is linked to comparability. Okay, so they are interconnected, right? Right. Then second last one, guys, please write. What is it? Timeliness. Okay, timeliness. Please write there, guys. Timeliness states that the financial information should be available to decision makers in time to be capable of influencing their decisions. Full stop. Next line, right? More updated information will be more useful for decision making. That will lead to better decisions and outcomes. Full stop. One expression, right? For example, discovery of an inventory loss that occurred a year ago indicates poor inventory management. And owner would have taken corrective actions in a timely manner to reduce inventory loss. One expression, right, guys? Last characteristic, number 6, understandability. Understandability. Okay. Right, please write there. Understandability states that financial information should be understandable or comprehensible to users. With a reasonable knowledge of business and economic activities. And such information is presented clearly and concisely. Concisely. First one. Next paragraph, right? Understandability includes classifying and categorizing financial information,
Classifying
and categorizing financial information and presenting them in a simple language. In a simple language. That is free from accounting jargon. Jargon. You know, guys, jargon? Yeah. Which is terminology. Yep. You know, Christian? Jargon, terminology or the technical language, right? While using graphs and charts. Okay, guys, you can read the timeliness and understandability. I'll explain it. Okay, so what is this timeliness? Yeah, timeliness means we have to report the information in a timely manner so that whoever the users will have the updated information for their decision making. Otherwise, let's say, for example, now this is the end of December, right, in 24. Let's say we are providing the last year's financial reports only now. So is it timeliness? No, that means we are almost 1 year late. So then it cannot be accepted. It's not the timeline. So that means we have to report it in a timely fashion. Otherwise, if they are kind of old information, they are not going to be useful for decision making. Right? So let's say you are going to a doctor, right? And let's say maybe we have a kind of cholesterol report or blood pressure. We are taking a report last year. And then can doctor give us a medication? No. So then it's kind of useless, yes, today. The only thing that we can check, and doctor can use it to measure the performance, improvement, right? Or something like that, but the medication is not useful. Yeah. Then next one, understandability. Understandability says that we have to report the information in a simple language. Why? So that even the people who don't have knowledge in accounting, or people who haven't done accounting, right, in their VCE or in their uni or somewhere, still they also can understand. So then, because why? We can't expect everyone to complete a course in accounting, right? To read and understand the report. So people who have a kind of decent knowledge about business and economic activity should be able to understand what is written in the report. So we can't be using jargon, which means terminology we can use but not excessively, right? And on the other hand, we have to report them in a simple language, including maybe charts, graphs, etc., tables, etc. Okay? That's the understanding. That's it for the characteristic. What do you think, guys, about the characteristics? Huh? You got it? Wonderful. Then I gave you the tube, right? We'll start from the first one. Please read the question, guys. It's quite similar to the assumptions we did, right? Okay, first off, each of the following situations identify the appropriate qualitative characteristics. I think it should be characteristic, right? And explain how it should be applied. Okay, first one. And took 1,000 from the cash register of a business to pay for. Okay, yeah. Okay. To pay for her son's school fees, saying that this is my business and I can use my business's cash as I wish. Wonderful. What would you say, guys? What is the characteristic you would okay, if it is an assumption, what was it? Counting entity assumption. Very good. Right? What is the characteristic? If you are not sure, you can refer to the book and tell.
Is it relevant?
Relevance? Okay. Okay, one answer you got relevance. Relevance? You agree with your friend? What do you think, Krishan? Relevance. What did you say, Pranav? Relevance?
I said relevance because this cash is used for some school fees and it's not the business's fees.
Yes, not business's fees. Yeah, correct. Not business's school fees. Yeah? Business doesn't go to school. Yeah. Correct. So then, that's why. Very good. Wonderful. That's correct. Otherwise, you know what you can do. If you are not sure, I'll give you another trick. Right? Hint. You know what you can do is check about the assumption. If you are not sure, check the assumption. Then remember in the note I have given assumptions are related to this particular thing. That also you can find. I mean, if you are not sure. If you are sure, no problem. Right? You have to use the theory. But I am saying, right? Is that what you said? Used? Yeah. So that's the hint, right? You can use. Okay? Right. Take down the characteristic. Relevance. Relevance. Right? Dash and right? Any transaction that is capable of affecting decision making must be recorded. According to relevance. Full stop. Withdrawal of business cash to fund a personal expense by the owner is relevant to the entity and should be recorded. as drawings to ensure that the owner's equity of the business is not overstated. First up. Okay guys, second one. You can read it and tell me what it is. What is it? Faithful representation. Very good. Same faithful representation. Christian? Faithful? Okay. Varun, why did you say faithful?
This is neutral information. Like the information is not neutral.
Yes. So basically neutral. And then why did you say faithful pronoun?
Yeah, because it's not neutral, it's subjective.
Subjective, because opinion. Yeah. Then, what did you think, Christian?
Because it's neutral. Without violence.
Yes. Okay. What about the verifiability? Verifiability. Because now this they have purchased these premises for $500,000, right, in 2010. Then now the independent valuers are saying that look, it is one person is saying, or one real estate is saying 1.1, another one is 1.15, and so on. And some other people also say different values. But the thing is that faithful representation is also correct. But what is more correct is verifiability. Okay, why? Because there is no source document for us to validate or to include this information, whatever the millions they are saying. Right? So even though it is 10 million, we can't record it by no proof, source proof. But also, remember I told you, verifiability is the core to support the faithful. Yeah? So then, in the exam, both of them will be given correct, but what is more correct is verifiability. So take it down. Verifiability is the answer. Another try. The premises should be valued at its original purchase price as this value is verifiable. By a source document. First up, by recording the premises at this value, the financial information will will allow. Different knowledgeable and independent observers to be assured that knowledgeable and independent observers to be assured that it is faithfully represented. Okay. Right. Part C. So, Jim started in the pastry shop. In 23, his business reported every month. 24, it started reporting every 6 months. And contemplating to make it every 12 months next year. Okay. The last question. What do you think, Christian? Comparability. Okay. Comparability. Comparability. Christian, why do you say it's comparability?
Because you said that all three semi in order to be comparable.
Yes.
And it's not.
Yes. Then what is the rule that they have changed?
The period.
Period.
Yeah.
Varun, what do you think? Why do you say comparability?
Yeah, because like the period assumption is changing.
Changing. Pranav?
Yeah, because it's not consistent.
Consistent, correct. So the length of the period is changing. So then, so it's like, let's say we are going to have test on you 12 months, and next time we are going to have a test in 1 month. So we will teach you for 12 months, then you have a test. Otherwise, we'll teach 1 month and then you'll have a test. Then can we really compare them? No, one is too long and it will have a lot of information. This one, a little bit of information. So we can't compare your scores, your marks. Right? Yeah, comparability is correct. So all of you are correct. Take down comparability. Comparability. Under that, right? If a business uses consistent reporting periods, it allows for the direct comparison of financial information from one period to the next. Full stop. This comparison will then inform decision making by users of the financial reports. First up, inconsistent periods will breach the comparability. As in this business. Okay guys, please read the next one, part D. Yeah, figured out. Yeah, what is it? Verified. Very
Say faithful.
faithful, okay. You don't follow your friend. Christian. Verifiability, okay. Higher vote for verified.
Verifiability, yeah, it's
Also verifiability. So you are saying for both faithful and verified. Why?
because for verifiability, obviously, there's no source documents.
No source documents, very good.
Yeah.
And then?
Faithful representation, subjective, because it's just on a memory.
Very good. And also another one.
Another
With the faithful, because you are saying you said faithful, yes. Another point is there. What is it? Free from, very good. Thank you. Why is that? Why is it free from material errors?
It's like no source documents to like verify it.
Yeah, no verify, yeah, and they are not accurate. Yes, they are not accurate. Why? Because material errors means what? What did I say? So they can have immaterial errors. That's fine, but they can't have material. This girl is emphasizing about her memory. Okay, so then are we kind of comfortable with her memory? How can we know? We are not sure, right? So then maybe she has a memory usually, but we don't know. We can't trust, our memories. Sometimes our memory can be wrong. However, guys, in accounting, we don't check the memory. We don't have a method to check the memory. Yes, so then, right? Then, however, we don't trust the memory. So you guys said both of them, right? Yeah, both of them are correct. Verifiability is also correct. Faithful representation is also correct. Take down the answer, guys, please. Verifiability. Or faithful representation. So, however, you will have to stick with one in the exam. Right? Don't write both, because why? The reason is you are wasting time as well. Whichever you are more confident, right? Okay. So right there, all transactions should be recorded at values. That are verifiable by source documents. Full stop. Recording revenues and expenses. At estimated values which are biased is not accepted because such financial information will not allow the independent observers to ensure that it is faithfully represented. Right? Full stop. So I basically gave you the answer in terms of the verifiability. If you pick the faithful representation, what would you have answered? Then you would have said, according to the faithful representation, the real world economic events should be reported in business reports. How? In such a way that financial information should be free from material errors. Now, according to her memory, we can't assure that, right? That it can have some wrong information. On the other hand, it is not neutral because they are based on a person's opinion, right? So then, even though both it is a memory, and then it is free. It is not free from actually bias, or it is not neutral. Okay, guys. Next one, part E. This is a bit tricky question. If you are able to understand it, wonderful. What do you think, guys? Yes, Christian, you sorry? Relevance. Okay. Any other answers? If you have like even two, a couple of them, couple of choices in your mind, tell me. Right? Still I'll accept for this one because this is bit tricky.
Understandable.
Understandable. Okay.
I think it's understandable.
Understandability. Okay, two understandability. Right. Then, why did you say understandability, Pranav?
Because I don't think it's categorized and classified correctly.
Categorized and classified correctly?
Yeah.
Okay. Alright. Wonderful. Christian, why did you say relevance?
Because relevance, it's about which information should be included, and that information that is not included can be important towards decision making, not having it.
Okay, so you think that the classifying is not really, not classifying it is affecting the decision making? Yes, you are also correct. What do you think, Varun? What did you say? Understand?
Yeah, because it's about it's not classified and it's
Yes, categorizing.
can like drive it and stuff.
Yes, question. It is actually understandability. Relevance is also correct, but as an answer, right? By understandability, because of categorizing this case into assets into current and non-current, we haven't done again, those things, because it's our next lesson, guys. Counting elements is our next lesson. And then current and non-current in this is, I'll quickly tell you. Current means short-term assets, which means the assets you can, or your resources that you can use for up to 12 months, right? Non-current means long-term assets, like the assets you can use for more than 12 months, like computer, mobile phone, furniture, right? They are our non-current assets. Current assets means like cash at bank, maybe like our stationery, right? Things like that. Okay. So then current then liability, same story. Like current liability is non-current liability. So then it is actually understanding. Take down the answer. Understandability. Financial information should be understandable by the users. With a reasonable knowledge of business and economic activities, full stop. Classifying financial information in the proper manner in terms of current and non-current will make the users to understand reports. That will help them make more informed decisions. First one. Okay, next one. 7:41. Yeah. When do you want to go, Pranav? 7:45 at the dot?
Yeah, new one.
Okay. Next one. What do you think? Timeliness, you are saying straight away timeliness. Christian, timeliness? Timeliness?
Yep.
Yep, why? Why is that timeliness?
Because the information is given too late to help the decision.
Very good. So then electricity bill misplaced in January has been found out in August after 7 months or 8 months maybe, right? So timeliness. Good. Then because you can write timeliness, right? You know how to answer it? Yeah. Now you know my pattern. Yes. What is my pattern? What we did in accounting assumptions also. We bring up the theory, right? Related theory for that, and then we apply. Okay. In this case, what would we say? So basically, in this case, we can say that timeliness says that financial information should be available to decision makers in time, so that it will influence their decisions. So in this case, electricity bill has been misplaced, which is about 7-8 months late. So if it was known earlier, then if there was something wrong with the electricity bill, let's say if it is too much, right, then owner would have taken corrective decisions. Yeah. Okay, don't worry guys, I'll give you the answer. I'll update, I will post it in the Google Class, right. Now, part G, we'll quickly discuss because he's kicking himself to go, right. Okay, Jonathan is an accountant who prefers to report accounting information using only technical language to impress others. Wonderful. Understandability. Understandability. I made this question. So impress. We are not going to impress the people. Right? What do we do? We are providing the information as for the users, not to impress. Right? Okay. So then understand. Good. Next one. Okay. This is very interesting. Mary of beauty salon says that she doesn't see why she should differentiate between non-current liabilities and current liabilities. She therefore reports them all under one heading, liabilities. Now what is this one? Again, classification. Now what is this one? This is tricky. This is, I think, there was a VC question like this. See, we are doing VC questions, guys. That means when we finish this course, you should be in a good position, right? So you can answer any question. That's my target, right? Even if somebody gives you, your school teacher gives you hard questions. Of course, in NOSL they are giving all these hard papers. So then you should be able to kill them, right? Before they kill you. Before the questions kill you, you can kill them. Right? What is it?
Say, understandability.
Understandability. Understandability. Sure? Understandability?
And
Relevance. Which one?
Faithful representation.
Faithful representation.
I think
No. Understand. No, not faithful.
No.
Yeah, not faithful.
I think both. So
Both.
represent
Okay.
relevance and understandability.
Which is more?
Understand.
You are basically more towards the understand. Why do you say faithful?
I don't think it's complete.
Complete?
Yeah.
No, complete. Because why? What is complete? That's the thing. That's why I gave you the no. What is it? What does complete mean?
Represents the whole picture.
Whole picture, which means we have to give a minimum description and a relevant. You think it's not there? It's there. Okay, actually it is relevance. Why not understandability in this case? Because this one we are just specifying only liabilities. So what liabilities means what? What we have to pay, right? Current and non-current. Current means that you have to prioritize, you have to pay immediately. Non-current means you can pay, you have more time, right? So then, in this case, you are meeting the current liabilities. So then, owner knows that what liabilities should be given the product. So it's not understandable, it is relevance. Okay. Then, because we have more questions. Okay, the rest. Okay, I will give you answers up to H, which is the one I discussed last, right? About the Mary of beauty salon. The rest is homework. If you are not sure, try with the pencil. And if you are fully sure, 100% sure, you can do actually with the pen. But the rest, you have to try it for homework. So that's the homework, guys. So this is the last class we are meeting for this year. Then we'll see you again on the 7th. I will post you in the Google Class as well, right? Send you an email as well. So we will meet again 7th. But when would you come up?
I think I'm coming back on the